We're nearing the halfway mark in a volatile year of trading. Although the S&P 500 index is down, it's not quite yet an official bear market. Traditionally, a bear market occurs when a market or security is down 20% or more from a recent high. Since the S&P 500 is off about 13.5% from the January high, right now it's only a correction. However, the Nasdaq Composite is down 23% from the November 2021 high. That means the Nasdaq is in a bear market. But if the S&P 500 does officially enter a bear market, Bank of America strategists have calculated just how long the pain could last. So, let's take a look. Looking at this list of 19 bear markets over the past 140 years, B of A found the average price decline was 37.3% and the average duration about 289 days. While the past performance does not guarantee future performance, B of A says the current bear market would end on October 19th of this year, with the S&P 500 at 3,000 and the Nasdaq Composite at 10,000. The good news is that many stocks have already reached a bear market. Currently, about 49% of Nasdaq stocks are more than 50% below their 52-week highs. 58% of the Nasdaq stocks are more than 37.3% down, and 77 of the Nasdaq stocks are in a bear market. B of A has more good news in that bear markets are quicker than bull markets. So on that high note, let's take a look at the charts. We're going to switch up a little bit again today. So we're looking at the 6-month daily chart on the Fidelity Nasdaq Composite Index ETF. The symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. Now, just simply looking at the chart by that low here, you can tell that this chart is different than the S&P 500 or the Dow. And as we've stated, the Nasdaq is in bear market territory, so you would expect a lower low. Now, going back up here, you could definitely see that we have a channel moving on down there with the bottom channel line like that, and then the top channel line moving through like that. Not a straight line, but you get the idea. So by this, we may have a little bit more go in the Nasdaq, but only time will tell. I do sense that we are trying to turn. Certainly in the S&P 500, it's trying to bottom and base, but it's been a difficult time, and it's been treacherous out there depending upon what stock or indices you're invested in. Let's go ahead and take a look at the oscillators. Moving on down here, volume has picked up, but it's really not all that significantly negative. It's out of the ordinary, but no red flags here by me. It has been difficult if you've been invested in some of the high-tech stocks, but look, let's keep this with a relative perspective. Things really aren't that bad. Looking here at the MACD, you can see that we made an attempt which got reflected and then bounced back down here. I think we're going to take another attempt next week at another bottom base and head up through. I can't say if it's going to be successful next week. I've been very early in all of this, so I'm going to shy away from making another prediction. Predictions can humble a person, especially by a stock market. So I do say, though, that these are the beginning formations of a bottoming and basing, and it will occur. Just how long? I would say the next week, probably 2 weeks. Moving on down here into the histogram, you can see that from this drop here, the bottoming and basing, much of it has been done. We came up here, got reflected back down, and we're only at this point here. I would imagine we perhaps could have a few more red days down here, but I don't think we're going to get as far down as we were here, and certainly not as far as we were in this area here. So I think the bottoming and basing is just taking some time. And as we've talked about before, when you have separations between the fast line and the slow line, you can have some sideways trading and volatility. We didn't have as much sideways trading here, but more than often the sideways trading and the volatility does show up. It certainly has in the last few weeks or so. Here into price rate of change, you definitely see the market trying to bottom and base, maximum negativity at that point, at least by this oscillator. And then the improvement there, you can see that we just have this slight move here in the sawtoothing on the fast line. It's hanging there above that -5. It does want to head on up. So this is saying I vote for improved market conditions within the next week or two. Certainly relative strength as well. Definitely bottoming and basing. It's pretty clear to me. Perhaps the price chart is just a little bit behind, or I'm just a little bit early, as usual. Stochastics, the same thing. Again, Williams, not bad. A long time here bottoming and basing, and yeah, it's painful, but that occurs sometimes, especially when you have so many headwinds that are against the market. Moving on back up here to the price chart, one last look, and you can see that we're definitely in a downward market. Hopefully we'll get some bottoming and basing in here sooner than later. And sooner to me, once again, hopefully next week, but most likely by the following week. And for today, that's ChewDog Charts. Thank you.